Forge Global going public via SPAC with ticker MOTV. And I think it is extremely overpriced deal. Here you can see Forge revenue, and in 2021 they predict $123 million in revenue, and with CAGR 38%, it will be close to $200 million in 2023. And if we will divide $2 billion to $123 million, we will get 16 price to sales ratio, and it is insane. Super fresh investor presentation, they published it yesterday. Super skillful guys, previously CEO of Penske, Totality and Novo. It is a transaction summary, capitalization, equity value $2 billion, and I think it is super high, 68% existing Forge equity rollover. Companies staying private longer. In 1999 it was 4 years, and now it is 12 years, and valuation a little bit bigger, from $493 million to $4.3 billion. More unicorns, and the size of private market growing too. And here you can see the answer why I'm investing in pre-IPO, mostly because we can get a higher return, and you can see 37% from IPO price and 277% last pre-IPO private financing, 12-month returns. Forge company have lots of data, markets, and their custody for these deals. Also, they have lots of partnerships with big names like Wells Fargo, Acorns. Forge brings access, insights, and liquidity to innovative CEO, dedicated employees who wants to buy a house or trade their shares, passionate individual investors, and institutional investors. Global roster of blue chip private companies, and it was possible to buy some companies on Forge Global or SharePost, and we can see lots of big names like Unity, UiPath, Dropbox, Marqeta, ThoughtSpot, and you still can buy some ThoughtSpots Forge Global or with me, Automation Anywhere, 23andMe, Flexport, a huge amount of awesome companies. Private market ecosystem, 10 billion plus transaction volume, 19,000 trades, and if we will divide it, we can calculate that average deal close to $500,000. 142 unicorns traded on Forge platform, and total we have 762, and it is quite big upside. Here you can see how it looks like inside Forge. Nothing interesting, and I think you can duplicate it easily in 1 year or something like this. I don't think that data is valuable. Primary investments and secondary trading, where seller and buyer meet on Forge and then invest in a private company and some other options. Significant opportunity for recurring revenue growth. Opportunity to be like a Nasdaq? No way. Numbers of subscribers for PitchBook and CB Insights. It is a different shape of market. Close to 20% potential percent of revenue in a long term. Total revenue per core account. Cash administration $83 million, transaction fees $57, and account assets fees $356. 20 to 30% adjusted EBITDA margin, and now they're trading close to zero. 3% in 2021, 8% in 2022. They compare themselves to high growth fintech like Shopify. No way. Or like Nasdaq or TradeWeb. Forged data and insight benefit investors and private companies alike. And here you can see a really strange example. Imagine that you're trying to buy Palantir right after this news, and it was possible to buy it maybe somewhere here for $8 plus commissions, plus you need some structure for it, and we're getting like close to $9, and the same 9.5 price on a public market. Not a really good example. I think it is a super bad deal because right now the real price close to $500 million or something like this, not a $2 billion. Maybe if they will draw down to 5 or something like this, I will add this company to my yes to buy list because it is some kind of a monopoly. Plus now it is a public company and maybe they will acquire more customers. Previously I recommended to you a photo stock and it increased by 300%. Subscribe to this channel to make money.